Garrett, I saw that you sent out a note yesterday that China is informing banks to buy stocks to support the market. What impact does this have? What are the ramifications here?
This came out of zero hedge, so I haven't been able to confirm it, but it does seem like something that China would do. Keep in mind, central banks around the globe have really kind of jumped into some uh, esoteric ideas on how to provide liquidity and how to keep their markets from crashing. We saw China buying or Japan buying up ETFs not long ago with their companies. Effectively, it got so bad that they had nearly nationalized their economy. The U.S. here, we're buying mortgage-backed securities with the Fed. It wouldn't be shocking to see the Fed go beyond, corporate bonds, as I believe they did in 2020. But with China, again, the liquidity issue in their markets, they are trying to save face. They are trying to avoid what is already a very ugly situation with their housing and their real estate markets. That for anyone who has said that China has embraced capitalism, check this out. Right? Because this is just pure dirigism, pure centralized planning. And if it is confirmed, again, this is all about protecting the CCP, not less about China protecting China's economy.
Well, I think it's a sign that anybody who thinks there's actual growth in China is fooling themselves.
Yep.
Now, how do you think this plays out? Now, I heard you mention the Fed. I can't imagine the Fed trying to force banks to buy stocks. But do you think they could do some cajoling in the bond market? Because I got to tell you, the bond market looks like it could be at a tipping point, within days, the way things were trading yesterday. What are your thoughts there?
I mean, you look at JNK and you look at IG, IG's investment grade. Remember, we did an event here, Mark, 6 months ago, and we told people, get out of these ETFs. Get out of bond ETFs because these things will break bad. And what I think you're probably implying is that if we start to move into a 40 VIX environment where the market completely gives, there's no bid on these ETFs. These things just go. No one is going to touch these. So, the idea of how can the Federal Reserve provide some level of liquidity or support, I don't know the answer to that because, we go back to 2020, they were buying debt, right? They were buying corporate debt.
They were buying Apple debt for some odd reason. It made no sense.
Right.
Yeah. I've been telling people, watch the relationship, and I track this. I watch the relationship of HYG to LQD, 601, same thing as JNK and IG, and then to track the relationship between LQD and IEF. And as those spreads start to widen, there's a direct correlation between a rising VIX and those spreads widening. And that is one of the relationships that I really watch. And when those blow out, that is when we reach capitulation. That is when things are really getting bad. So how are you taking advantage of this market?
You know that I'm net short at the moment, and we've been in negative momentum since September 13th. We moved to cash. We've missed. What are we at right now? Are we off about 18% in 2 weeks? Does that sound right?
Yeah, it sounds about right. A little bit of a short squeeze today, but yeah,
that's okay.
We are off about 400 points.
Remember, cash is a position. This is one of those days where you get that type of short squeeze. You get a 3, 4, 5, maybe 7% move on the SPY. Don't be shocked if, again, I was looking at this yesterday. I said yesterday I would not be shocked if the SPY hit 385 by the end of the week. This is a similar pattern that we saw back in January, and we saw it in June. Oversold conditions. But understand that the trend is still to the long downside. And looks like we're repeating a pattern similar to 2001, 2008 in terms of how the equity market moves lower.
Yep. But
we have a lot of chop similar to what we saw in 2018. Look at the SPY, October through December of 2018. We had 15-point swings up and down, typically moving higher toward the beginning of the month and then lower into the third Friday expiration. Finally, the market gave out in December of 2018. That was when the Fed pivoted. The Fed is fighting inflation. There is no signal that they would potentially pivot. I am now getting to the point where I do think that this market is getting to what you're going to state. We're going to get to that capitulation relatively soon. And at that point, that's where I'm looking for insiders to step in and buy a lot of their own stocks. I'm also looking for the Fed to pivot on cuts later next year, Mark.
I'm with you. I think we're going to swallow up all the gains from the pandemic. So I'm looking. I've got kind of 33.80 in my mind as an area where I'm going to start dabbling, and then 29.50 is my final. I'm putting both feet in. It's going to be interesting over the next couple of months. I will tell you, Garrett, that yesterday traders bought 300,000 October and November VIX call spreads yesterday, and
There
that's
you go.
because they are terrified and we're in backwardation and people are scared.
All right. Well, let's not have everybody kind of running and flushing themselves down the toilet. Let's look for some ways to make some money today with volume profiles by request with you and Foz.
Thanks, G. Homie
Back to
G.
work.
Be safe.